what happens with Bank Negara Malaysia's position on rates and managing the economy?
Right. Well, we've had a sort of a global turnaround in the dollar index. You know, it's been for the whole of this year and maybe quite a lot of last year, just a sort of a relentless strength in the U.S. dollar and weakness in just about every other currency. And of course, we have a basket of currency against which we are measured. Large part of it is the Chinese yuan and the Japanese yen, and they've been awful. So actually, the headwinds have turned into tailwinds for the time being, which makes Bank Negara's need to raise interest rates less desperate than it was before. But we've had, something like 1% of rises in interest rates here, maybe 1.5% against something like 3.5% to 4% in the U.S. So until this turnaround in the U.S. dollar, we might have been under pressure to rise interest rates. I think the pressure is not so great, and domestic economy accounts for something like 55% of GDP here. It all depends on whether the ringgit can continue to gain against the U.S. dollar. And I would just point out that a Big Mac here costs 52.4% less than it does in New York.
Gerald, so where is the opportunity? I mean, you're talking about how a few select names are drawing interest. How inclusive can this growth be under the new government?
Well, I think, as I say, it may not be through the genius of the government, the cabinet, that the economy turns around. It's just that we've sort of hit a trough with price to book and price to earnings ratio at nearly 2 standard deviations away from where it has been over the past 10 years. We're back to global financial crisis levels. So I just think we're too cheap. And we're assuming at the end of the world that it isn't going to happen with this unity government. The electronics sector, manufacturing has been extremely successful over the past few years and is holding up a lot better than our neighbors. We have a lot of foreign investment now into Malaysia, which has been enhanced, I would say, by this trade tensions between the U.S. and China as people change their supply chains to include components being manufactured here in Malaysia. Logistics also has been a huge beneficiary, but I suppose the big thing is that the economy is rebounding still from the shutdown of COVID, and the best way to play a pickup in domestic consumption is the banks.